Welcome to Java. Thank you for joining me. It's Wednesday, December 18th, 2024. It is also Fed days. We're expecting the interest rate decision later this afternoon. And I would like to point out that this is also Discord Day. We're expecting to have our last chat for this year for 2024 this evening, 5 o'clock Eastern Daylight Time, after Greg's live stream. So if there is something that you would like to speak about, please join us there and put it into the main chat so that we can have our question and answer session, or anything that you would like, have that chat, because next week is Christmas Eve holiday and the New Year's Eve following that. So with this, we've got big Federal Reserve Day, looking at crazy eye guy here again. So let's go into what's going on with the markets. Now we've got the MMRI favored risk indicator has pulled back slightly, and this is with the relative strength of the dollar as well as the 10-year yield both pulling back a bit, although the 10-year yield gaining strength again ahead of this decision, which is a bit contrary. We've got the fear greed meter is at 51, heading back down a little bit off of the greed territory back into neutral. So markets solidly waiting for this decision, which they have already decided and priced in, quarter point rate cut. Now, the really big question is, where do they go from here? Will they continue to cut into next year? Because we're watching inflation increase. Now, they're watching two metrics. One is the increasing inflation, whether it's expected or not. They know it will continue. It's only a matter of pace. The second is unemployment, which is starting to show some cracks. Now, with all of this, we've got the stock market still continuing all-time highs. As I was saying here, we've got the relative strength of the dollar has pulled back a little bit. Now we've got Asian markets making some moves. So jumping over to cryptocurrencies, we've got Bitcoin has pulled back a little bit just below 105. Now, in my opinion, and what I'm seeing in the charts, we've got this retrace, but if it stays above 104,000, this could just be a settling and continuance higher as we are watching more adoption. Now, we did also have some movement with XRP, and this was with the, as I spoke about yesterday, the RLUSD stablecoin that was introduced. Now, we've got one of the most ridiculous things out there. We've got the United States Congress reaching a quote-unquote a last-minute deal to avoid federal shutdown prior to Christmas. Now, this is another load of garbage they're feeding you. They do this on purpose to push it to the very end. Why do they do this? It enables them to put in last-minute spending measures in it, kind of to force the vote on these. They call it all of this pork spending that they've got is the term for it. They've got additional funding that they've got coming out for Ukraine, all kinds of things that are ways to spend the tax dollars that they require you to pay without your approval. That is taxation without representation, and they do this by design. So they can't go without a government. Somehow they can push all of these billions over to the wars, but they can't fund themselves to work. So this is nothing more than a ruse, if you will. They're pulling the wool over well, I wouldn't say they're pulling the wool over everybody's eyes. Everybody sees what they're doing, and yet they're allowed to continue. So with this going into our charts, we are looking at currently United States stocks relatively flat, showing the volatility index down. They should be green by the time it opens, probably prior to market. As I'm doing this, they are increasing. Now we've got gold flat, oil relatively flat, and weakening a slight bit. So this is a lot of Middle Eastern stuff. It's still relatively stable and still depressed. Still have a bit of weakness there. Now we've got the futures are saying that stocks should go positive. I expect a bit of chop today with the rate cuts coming out, and the big story is not the cut because everyone expects that, but the conference afterwards and the language that Jerome Powell will use, because that will kind of give an eye into whether rate cuts will continue or not. So this is the calendar. We're getting housing starts and building permits prior to the market to open. So we're in more of a stock-specific market. I'll talk about that in a moment. So we are getting Fed Chair Powell at 2:30. They get the decision, which I don't expect to be a mover unless it is anything other than that quarter point that is already priced in and expected. But 2:30 is when he starts taking the pre-formed questions, and we'll see what kind of movement we get there. Thursday, prior to the market open, really this is the metric I think going forward that should be more important, and that really is employment. So we've got initial jobless claims coming out prior to the market open, as well as their reported GDP, gross domestic product, reflecting how much is actually being produced from the United States, and the Fed manufacturing survey. Now, they've got more coming out after this, but that's after market open. So with this, wanted to bring this chart out because this shows the stock market breadth. What does this mean? This means that it is not a broad stock market rally any longer. It is specific, larger stocks again, propping up the market. And this is kind of one of a larger crack, if you will, that is showing very much weakness coming forward, possibility of correction in the markets. Now we've got something else with the banking industry. House Republicans warning the banking agencies they've got to pause their rulemakings. And this is because they are saying they can look forward to more regulation. And this is kind of against what was in the voting platform. So we'll see how this works out. So we've got the CFPB, Consumer Financial Protection Board, and the SEC are kind of on the deck. So warning shot from the incoming administration, if you will. Now, with this, as I was saying, really we need to watch the unemployment rate. And what we're watching is this. These grey lines are showing recessions. And with the labour market directly prior to previous recessions, it is marked by significant dump, and we're again at one of these points. Now, I've been saying before, we're going to expect more job losses and higher unemployment. And this is not just for the United States, but Western world in general. The UK is already beginning to show this. Germany showing cracks in there. So with this, we've got some stock-specific movers for today. You'll hear about this probably. Nissan and Honda in talks to merge. Now, they're trying to save themselves in a crumbling auto industry. And on word of this, Nissan surged 24% as the word got out on this. We've got Microsoft acquiring twice as many NVIDIA artificial intelligence chips as their tech rivals. They are clawing their way to the top, trying to stay on that top level. Now we've got Micron is increasing in price, going up prior to the market open. They have earnings coming out. A few other things to mention. Apple is at all-time highs, and it kind of hit a serious resistance level. So kind of showing it's due for a pullback. We'll see what happens. Nothing is guaranteed. It's only probabilities, and this is not financial advice. But Apple hitting that resistance level. We've got Google also hitting kind of a top sign. They're showing that they're hitting resistance and could be due for a bit of a reversal. We've got Tesla at all-time highs, although they're showing they could achieve continuance, as well as the Bitcoin that we just spoke about. Now, what does this mean? These are your Mag 7, huge NASDAQ components. So if one of them goes down, could drag on the stock market. Two or more, it's definitely going to pull the market back. Okay, a few other things I'd like to go over prior to the market open. This is the German economy. Their situation, we've been speaking about this. They are near depression levels now, serious issues. And with all of this, we've still got heads of their state for the finance saying that they want to funnel more money to the Ukrainian issue. So, with this, as I was saying earlier, the auto industry is not just in decline, it is crumbling. Volkswagen profits dropped by 64%, Audi losing 91%, which is unheard of. BMW dropping by 84% and Mercedes-Benz by 54%. This is significant. They are coming out with stories about how there were an increase in auto purchases, but these are skewed numbers. Their production is in serious decline. So with this, we've got Ukraine will not extend Russian gas transit deal. How is this significant? Germany is dependent upon inexpensive energy in order to continue production. So, if they cannot get inexpensive gas, not to mention for their citizens, for heating, their production will just crater. So, very serious economic worries for the Western world over in Europe. With this, we've got the UK also, inflation rising as expected. Now they know inflation is rising. They know they're not producing and they're still crumbling from within. And this, while this is due to Guinness shortage, you can look forward to more of this. We had a pub turning to ration cards. This is an old play, and we're going to see more of this. Price controls, ration cards, rationing going forward. And these are not other significant signs that it's in a depression. They are just not calling it what it is. Now, regarding Syria, I want to talk about this just a bit. The turmoil in Syria, this is affecting a lot of the trade, but this is the geopolitics. United States military conducting more airstrikes to prevent Islamic State from making gains. Let's go into this a little bit more. The United States military said it killed 12 militants from the Islamic State terrorist group, saying they used precision airstrikes on Monday. Now, this is clearly they are pushing and manipulating the governments, the incoming from the outside. Now, we're not at war with them. However, they have allowed these recent strikes to go on. So this is not within what should be happening. However, it is a fact of what is going on. Now, they're controlling these regional powers, and there is a vacuum that has been left by the Assad regime that has fallen not by mistake. Now, paired with the military industrial complex for controlling other governments, we've got the mainstream media, and they've been caught red handed. CNN, I don't understand how they have a shred of credibility left, but they got caught red handed fabricating Syrian jail release story. They said that there was a regular civilian found in the network of Assad's prisons, trying to gain sympathy for this. And it turns out that, as this says, was an intel officer involved in killings, torture, and extortion. So you can't really blame Assad for putting someone like this in. However, that is what is going on forward. You can't believe the mainstream media. So with this, we know what's going on forward. Looking forward to an interesting and volatile stock day. And I wish you all green in this one. Until I see you again, stay free.